You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again to rock out with the option block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this old network. You're listening to us on the old Options Insider Radio Network. If you're subscribed, thank you. We love to have you guys, our regular listeners. If you're subscribed just to this show, you may want to think about upgrading that to a full subscription to our full network, because I use subscription in air quotes because it's all free. I'm coming to you now for a decade's worth of content. Cost you $0. Head on over iTunes, TuneIn, Stitcher, pretty much wherever you get your finer podcast programs, and you can upgrade your subscription if you're so inclined. Get the full mothership, the full fire hose, 15 shows. That means a daily news show. That means our advisor's option show every month. That means vol views every week. That means double dose of option block. There's a bunch of others in there. A couple of times a month of trading tech talk, TWIFO every week, talking futures options. You name it, we got a show aimed at it out there these days. Options Boot Camp, breaking down the educational stuff, all sorts of fun stuff. Check it out if you're so inclined and motivated. And maybe you got a nice long commute. Maybe you work out a lot, whatever the case may be. We got you covered. Lots of content for the old ear holes. And, of course, you can always get it via our app. And the hardcore amongst you who need to have it live right now can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. You guys know the drill. Grab the link and listen till your heart's content, and then send some witty comments, some repartee over there at the Rock Lobster. He appreciates it. All right, joining me on the old program today, the aforementioned King of Umbrage, a.k.a. the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
I'm remarkably umbrage-free today. Remarkably umbrage-free.
That is a remarkable thing. Must be a good day in Maine.
It is a sunny day. The wind is, we got rain, so I am happy. It was just, we needed it. That's all I can say. We needed the rain. So things are good in Maine today. It's summertime in Maine. How bad can it be?
The irony, you're living on the coast, yet there is no water. Water everywhere, and not a drop to drink, as the man said. So there you go. You need your rain, even on the coast of Maine, where it falls mainly on the plain, at least so I hear. Moving over to the land of weather shields and tropical paradises known as St. Charles, Illinois, where we are joined once again by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How go things in the place where you never need rain? Because if you do, you just hit 2 on the old weather shield button and you're good to go.
Well, in that place, the flooding has finally come down, so got to prepare for summer again, and early August by putting the boat back in and cleaning the dock off from all the flooding with which we had. But thankfully, our house is up high, so the house didn't have a drop of water on it. But I'm a happy man again because it's summer in St. Charles again.
I think you guys are just bored. You were bored of all the weather drama everyone else was having. So you decided to turn off the old weather shield for a little while. So you guys can experience some of that fun too. Glad to hear it's back on now and things are reverting to normal. Speaking of reverting to normal, let's revert right on into our first segment. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block, where we break down the wild and woolly action that was lighting up the street today. Can't get enough of it. Barn burner in the old markets today, as most of the major indices pretty much taking the day off, relaxing, taking a nice slow start to the week. The S&P and the Dow up slightly. The NASDAQ up a little bit more, getting a little bit of a wind in its sails there towards the latter part of the session, up about a little more than 0.5% on the day. That's pretty much the lion's share of the upside move. And, you know, a little bit of green. Anytime you see any green on the screen, that means you gotta have VIX take a back seat. And VIX had a little bit of a retreat again today, slightly, ever so slightly. VIX cash still in the single-digit range, 9.90 to be precise. I think it's looking good for my vol views prediction. We'll just see. We'll see. We got a whole week to go, so we can go hither and yon as long as we end up around here by the end of the week. I'm not looking too bad over there. But aside from that, it really wasn't a explosion of activity out there in the old markets today, listeners, even though we do have some earnings still popping off this week. So earnings season not done, not by a long shot. We'll get into some of that in a little bit. But before we do that, let's start off. Let's go out to St. Charles. Let's mix it up a little bit this week. Let's go to St. Charles. Uncle Mike, what caught your eye in today's just explosion, nonstop gift of activity that was the market today, sir?
The nonstop gift of activity with which we call it. Well, the main thing on my radar that I'd say that that actually moved was the fruit company Apple, up $2.20 or 1.4% on the day today. So we did have a little bit of movement in the things that Uncle Mike watches category. Just in general, there really wasn't a lot happening today. This was just a slight rally. Primarily, I would say that tech did drive a lot of this, but in reality, a lot of this really isn't that much. So not a ton going on today, at least from where I stand. So overall, this is kind of one of those days to where they'll say on this date, probably 100 years from now, they'll say on this date, back in 2017, America watched the market and nothing really happened of any great significance. And from a macro level, we do see it's kind of in the news right now. It looks like the UN does want to have sanctions against North Korea, and that they do not want them having nuclear power, and North Korea kind of disagrees on that. So that's one thing with which it could be of concern to the market at some point. But hey, we got a 9 VIX, so that means nothing's going to happen, right? The other thing, it looks like they're still trying to have some type of a prosecutor come in to look into what's going on with Trump's meetings with Russia before the election. So that's something else that could be happening. But hey, it must not be anything because we have a 9 VIX. So what can possibly go wrong, right? So there's a lot of news on the macro level, but there's not a lot of movement in the marketplace. So compared to the level of news with which this is. So it's either the market believes this is going to be absolutely no big deal. The market could be right. The market could be wrong. Time will tell on that one. Or this really isn't that big of a deal at all. One of the two. So for now, it looks like things appear to be rather boring. But the fact that in the next month or so, we crazy things can and do happen in August. And on top of that, we'll have a lot of the, excuse me, a lot of the wealthy investors who spend their summers in Maine will be back to trading here in another month or so once Labor Day is over. So there could be a lot of excitement to come. But for now, hey, we have a 9 VIX. And that's all I have to say about that.
Yes, the epic 9 VIX that we've been discussing back and forth for quite some time, back on the old radar again today. A lot of things, I wouldn't say a lot of things, some things on the old radar. We'll get to a few of those popping off in a little bit. But before we do that, let's head back to the shores of Maine, where even though he's surrounded by water, he still is in dire need of more liquid over there. Mr. Rock Lobster, aside from your endless search for aqua, what caught your eye in today's explosion, unprecedented level of activity, sir?
I think it will be in our gold open mic tonight. We will discuss this topic, but you know, the skew and everybody, the skew is at all-time levels in this, and it's supposed to be because at the money volatility is 6%. and it's supposed to be at 6% because realized vol is what, 3%, 2.5% in the SPX in the last 2 weeks. So that brings interesting pricing, and we're discussing that. I mean, you could buy downside for so little money right now. It is almost beyond belief. So it's not, and it's not beyond belief because you can do it. So anyway, that is what caught my eye this morning. The other thing is I guess tech is trying to keep its rally going. Mike mentioned Apple, stuff like that. And NVIDIA earnings are about to come out. I mean, NVIDIA is kind of the new Apple here with the big growth prospects. It's only up a mere $80 since the last earnings announcement, the day before the last earnings. And I remember they were writing NVIDIA off as it's overvalued, it's over this, it's over that. Well, that's $80 ago. So I think some guys in our chat room were laughing about, we were looking at short iron butterflies, which did quite well, where you buy the guts and sell the wings. And they just all exploded because there's just no end of demand for the stock. I guess apparently as Amazon everything is going to be sold by Amazon, or Amazon will get in every mom and dad plunky business. I guess NVIDIA will be making the chips that we will all be using for the next 20 years. So I guess that's the thing. Intel hasn't quite, Intel hasn't done very much in, I would say quite a while. I mean, in mid-2011, you could buy Intel for about, 2011, 2012, it sounds like a long time ago. You could buy it for like, $21? I remember 21. I remember selling 20 puts. It's $35 now, so it's had a nice little return. But, nothing compared to NVIDIA. So NVIDIA has been grabbing all the headlines in the new business. And I think Intel's just retooling and trying to catch up. So it's an interesting, you think about it, between the two of them, how much of the processor market do they serve? And I know Samsung, I guess, is now I think they're the largest producer in the world of, I don't know if the number of chips or dollar volume, but different types. So, it's weird is you look at these companies and then just like kind of smaller amount of companies are dominating these segments now. So I find it, at least from a tech point of view, it seems like just fewer companies are consuming, bigger chunks of technology. But, I know as soon as everybody thinks of things as being a huge behemoth, something comes and knocks it on its behind. So I'm sure that will happen again, since it's sort of always happened through history. But it seems like at least for now, all that stuff you do on the web has got to be powered by something, and it's powered by chips, and that is what is driving this rally, or that's what's certainly helping the rally. So those are what I've noticed, and the continued rally in NVIDIA to earnings. I think it's up, another $20 in the last 2 weeks. So they are powering on, and everybody's climbing on. So one of my roomies today said, I think NVIDIA was the most bought institutional stock the last quarter. So I guess they're not done with it yet.
I want to go back to something you said a few minutes ago. You guys have open mic night at Option Pit. How does that work? Can I come in and crack some jokes?
You can come in and crack some jokes if you are an subscriber. So we get 45 minutes. I usually start with a topic, and then I let people ask questions, and we try to refine, and it shows people how to set positions up, and how to optimize positions. So it seems to be popular with our gold members. So it gives them some live asking questions about our gold class and stuff. So it is an open mic for Option Pit Gold subscribers only, once every week. Actually, we do it twice a week, once during after-market hours and once during market hours.
That's a shame. I wanted to come in and try out some of my new material. I guess I'll just go to Zany's down the street then. No, that's no fun. It's going to bust out. I got all sorts of VIX jokes, you name it. I got all the options-related humor. you could ever possibly handle, and probably more than you could possibly handle over there. But yeah, a lot of stuff. It's funny you keep mentioning NVIDIA, and you're right. It is an interesting story. They are kind of the little engine that could. And we talked about it. I remember it wasn't this. I think it was about a year and a half ago. Maybe I'll have to pull up the chart to make sure. But it was right around the time of they were languishing in the teens and 20s back in January of 2016, and that, as you recall, is the time of the Consumer Electronics Show. And I remember it might have been even the year before, so maybe it was 2.5 years ago now. But either way, I think it was a year and a half. And I'll have to pull up again the data to make sure. And they all of a sudden, it seemed like everyone collectively awoke to the fact that, wait a minute, they actually do make all the chips for everything we're going to be using in the future. Even though they had their own personal hardware forays with the Shield tablet and some other things that never kind of sputtered and died, and it seemed like NVIDIA maybe having some problems. And everyone knows them for, of course, their big high-end, computer graphics arrays that you need for a trading workstation or if you're a gamer or something like that. But, people never, I don't think, seemed like no one put two and two together until that event that, wait a minute, they're actually going to be making a lot of hardware that we need going forward. And all of a sudden, the stock's been on quite the tear pretty much ever since. So interesting stuff nonetheless. Speaking of things that were going up today, let's see how we're doing here. We're coming along. We'll get to it really quickly. A lot of people have been hitting us up. Why wait till Friday? We usually would discuss this on vol views, but I'm sure Mr. Rock Lobster, you saw this big write-up. Bloomberg just feasting on all things VIX and VIX futures and VIX term structure and the VIX. I think the volatility feedback loop is them too, or if not, it's the journal. But everyone, all these columnists these days are just feasting on all things VIX. They can't get enough of it. And Bloomberg coming out today, everyone hitting us up. What do you think about this? This is, of course, their article titled, appropriately enough, "Investors Have Never Been More Short. Volatility futures." They're talking about something we talked about a lot, on vol views quite a few times, that the short, everyone in the mother literally is out there shorting the volatility position. Short positions in VIX futures hit a fresh peak. ETFs that obviously are inverse also saw their biggest weekly inflow since June after a few weeks of people taking some money out. And this is interesting because this is kind of contrary to some of the options flow we've been profiling on vol views the last few weeks, where all of a sudden we're starting to see the return of some upside-leaning paper, the short 1x2, straight up call buying. We saw that crazy size bullish risk reversal out there a week or two ago. So some of the paper is contradicting this, but still, the futures are putting it down. They attributed, at least in this article, Bloomberg over there, they quote someone over there from Macro Risk Advisors, who they love to talk to on this topic, apparently, talking about people selling some variance, OTC, near-term short duration stuff, and also, obviously, VIX futures. It's just a way because they're sitting on tons of long vol and it's crushing them. If they have been, they've probably been sitting on it for quite some time. And so this is kind of a near-term way to manage the rent. Are you buying that, Mr. Rock Lobster?
Yeah, it could be. I mean, you're definitely, anybody that owns premium is suffering. You're not making any money. So, and also, plus the guy's the CEO of Macro Risk Advisors. I mean, wouldn't that you go to Macro Risk Advisor guy if you want to hear about the VIX?
I'm more about micro risk myself, but hey, to each their own. Potato.
And you sat in a pit. You had theta right in front of your face every day. While you were staring at the ceiling, waiting for summer to be over, so you didn't have to lose any more money. So, all of those things are a function of I guess the biggest thing about there just is not, like we talked about it last week, there just aren't these massive shifting policy directives coming out of the Fed and coming out of the government like there was over the last 8 years. There was a lot of Fed tinkering and tampering and tantruming and all this, whatever the heck they were doing, buying bonds and trying to juice things. And that was causing upside volatility. It wasn't even causing that much downside volatility. You had troubles. You just had all these big issues where, if the government kind of pivots the wrong way, you get kind of a disaster. And we didn't, mostly that was Europe bringing a lot of it, but then we had fiscal cliff and we couldn't get a budget here and all those things, and were very unsettling. And, the Republicans just aren't doing anything, I guess, because they're running Congress and they're succeeded in doing nothing. So how do you fade the volatility on somebody doing nothing? I mean, nothing is nothing. So, there's some economic growth. Corporate profits are very good. besides the North Korean potentate jumping up and down and saying he wants to blow us up or blow somebody up or something. Those are you don't have the issues that drove vol and drove the broader market that we have had in the last 8 years. And then, prior to that, obviously 2007, 2008, we had some, probably too much liquidity flooding into the market. Then we had the crash. Either way, that's what we've got. And he says paying the rent means what? Everybody that buys options has to finance them somehow. And they're just they're going to keep driving it down while their gamma just keeps eroding away. So it will go on until it stops going on. I have no idea how long that will be. But it seems like we need something. I mean, Congress is in recess. Now what the hell? There's not even any. We had that for a while, and now we don't even have that anymore. So I guess, we could stay. We could see just more touches to the 9 level like we did today.
Yep, got to keep paying that rent. I know that pain. If they're sitting on a lot of long vega, I know some of the big insurers and things are kind of by definition of how they do business. I could see why they're scrambling to get a little bit of near-term income in, because that's been, shall we say, a bit of a painful trade for the past 6 to 8 months. And no signs, at least in the near future, despite all the options positioning to the contrary, there's no signs that that's going to change or abate anytime soon. So we shall keep an eye on it. Meanwhile, let's keep on rolling into what was weird and wacky and kind of crazy, lighting it up today. Let's get right into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Feel that funky tune. It's time for the funky portion of the show. Let's get into the weird, the wild, the wonderful, the sometimes just head-scratching paper that was lighting it up. Let's kick things off over here in the place we like to start these days, because all you guys are just obsessed with it. These are, of course, Tesla. What's up with these crazy catastrophe puts? How long have we been talking about these rock laps? And yet people are still flabbergasted whenever we bring it up. We got more comments about it later in the mail block that we'll get to. Flabbergasted, floored that such a position could exist, and it continues to exist. It was growing. It kind of took a little bit of a hit, about 500 contract hit last week. Today, more piling in to the tune of 270 more. So all you keep saying, this thing is going to die off soon. It can't keep going like this. It has been. Even the Flowmaster, who was in our chat room last episode, had me over at Trade Alert. He wasn't even aware of these, and he started digging into them. And next thing you know, he's tweeting out graphs and going crazy. It's one of these positions that people are like, what the heck? What is going on there? Crazy size, but still about 28,308 open. So if you're paying attention, a little bit less than last week. It was about 28.5 and change last week. So someone's been closing out there of late, but I'm guessing they're coming back in with a vengeance this week. These are, of course, the 2019 50, yes, 5-0 strike puts out there in Tesla, a.k.a. the catastrophe puts, a.k.a. some of you have called them, what have you called them? You called them insurance against your Model S and the company going away, life insurance against Elon Musk for the company. I've heard hedges against every sort of OTC trade you can think of. If you have a definition we haven't thought of yet, or you haven't hit us up yet, hit us up. Let us know what you think. We've heard quite a few of them already. We'll get to a few more in a little bit, but still interesting. This strike just keeps on giving, keeps trading day after day, week after week. Crazy town. Of course, there was some news the other day, because there's news every day, that there was a quiet sale, a little discount coming in on the Model 3s, and maybe not the Model 3s, maybe the Model X and Model S. I don't know exactly which models, but they were knocking them down $3,000 to $5,000, a little stealth sale. So maybe that's perhaps weighing in on some people deciding to pick up those 50 puts. Got to buy those 50 puts because they're knocking off $5,000 off the price of a Model S. Either way, those trades continue to trade as we move on over to our first victim here in the old odd block. This was a bit of a call frenzy out here in good old P&G today. I think you can call it a call frenzy, call buy-in palooza, call it what you will, whatever you're comfortable with. A lot of call action out here today. This is a name that does about, well, of course, ticker symbol P&G. Closing today, 91.44, up about $0.75, about almost 1%. This is a name that does about 12,000 contracts a day. Today doing about 47,000, 45 of that coming on the call side, so about 23.5 to 1 calls over puts. And it was kind of a flurry. We saw some near-term paper, about 9,800 total on the day, of the AUG 90s trading in some small blocks. Some of them printing kind of late and even going above the offer there. That was all opening. These are 90s. These are expiring this week, so that's very near-term paper. Nearly 10,000 of those. OI only about 279 on that strike. But what first caught our attention was a little bit longer term, also in the call frenzy department. It was the AUG 97 half calls. Those were printing for some size as well today. We saw a block of 19,035. Interesting size, but that was the size that went up. Trading 22 cents right near the offer. A total of over 22, nearly 23,000 trading on that strike on the day. 500 and change only open there. So that's kind of interesting. It is worth noting it's about 23,000 of the 87 halves open already. So perhaps maybe someone legging in, but this was that'd be a weird short vertical to be legging into if that was indeed the case, because most of these were lifting offers out here today. So it does seem like it was a festive gotta have it palooza out here. Particularly weird were, of course, those near-term AUG 90s all opening, nearly 10,000 contracts opening on that strike, and that's expiring pretty much in a couple of days. So frenzy of paper there. Someone had to get some deltas, and they had to get them quick. Looking back at this past year out here in P&G, this thing has kind of vacillated a bit, dipping down as low as about 82 and getting as high as pretty much right about where we are now, right around the 92 level. So it's kind of interesting in and of themselves that someone would want to pile into these. Also, the strike selection a little bit weird, giving a little bit of room to run on the AUX, but the AUGs are in the money already. So someone playing an interesting fast and loose game there. Mr. Rock Lobster, what say you to our call palooza today in P&G?
Wasn't somebody taking a stake in P&G, shaking it up? Wasn't Nelson Peltz? Who was it? One of those dudes? Wasn't there a shaking up the board in Procter Gamble or something like that? I could have sworn that was happening not very far away from now. So it seems like they want to keep that party going. So maybe, higher prices, more, a little more action. Anyway, that looks like I would guess something along those lines from that. So they're just, you have to be realistic. They're just super cheap calls, and hell, what you going to spend your money on? So
what are you going to spend your money on?
I thought P&G was one that was a target I was just looking for. It was one of those big takeover guys. They buy seats and then they grumble and they extract their green mail and then they leave. It's kind of an easy way to make money when you think about it.
Yeah, little green mail, a little bit of advocacy, activist investing, I think they call it. That's the euphemistic term for it. You call it green mail, a little bit of potato, a little bit of potato mixing in there. Either way, someone wants something big to happen by the end of this week. So you too may want to play the watch and see game this week. 9,000 of those popping off by the end of this week. So something's got to happen sometime soon for those bad boys. The AUX got a little time on those, but the AUG 90s, that thing's got to move, and it's got to move pretty quick. So interesting to see that paper. We'll keep an eye on that. Maybe we'll follow up on that later this week, see how our friend is doing out there. Meanwhile, let's move on to some more funky paper. This is in everyone's favorite, the iShares IBoxx Invest Grade Corporate Bond Fund, ticker symbol LQD. Say that 5 times fast. Closing today, 120.77, pretty much unched on the day. This is the name that doesn't really do a ton of paper. It does a decent amount for an odd-block candidate, but it's no VIX. Doing about 4,400 contracts a day. Today, doing nearly 10x that, about almost 40,000 going up out there today. And what we saw, pretty much all of this print, and this seems to be maybe kind of how this thing likes to trade sometimes, was just a size, call it a combo, call it a conversion reversal, call it what you will. Didn't really see the huge, have to see, check on the underlying again. Didn't really see the huge underlying print. Oh, now it went up now. Now it's about 2.5 times ADV. When we were checking it earlier, they didn't really have the underlying up, so maybe there was a conversion reversal. We didn't see that earlier. But either way, what we saw, listeners, If you're saying, what the heck is that? You can call it a combo, if you will, as well. This would be the old bullish combo on the SEP 135 strike combo. Now, Mr. Rocklobster likes to throw out combo for pretty much any call and put combination. But usually when you say combo, you mean same strike, selling the put, buying the call, or vice versa. And that's exactly what we saw out here. We saw paper coming in, blasting out 19,500 of the SEP 135 puts. Doing this mostly in blocks of about 2,000 to about 5,000 throughout the day, so multiple blocks. Doing it from prices, the majority of them around $14.40, a few of them a little bit different, but the lion's share around that price. The calls are pretty much worthless, so they picked up almost 20,000 of those. I'm sure Rocklobster loved that, for prices around 4 to 5 cents. So completing their combo, doing both legs of that. Looks like with some of the size stock going up today, because this is a name that averages about 5 million contracts a day, doing a little bit over 2x that, which may line up with this combo. So maybe someone legging in to a nice conversion reversal, which is, of course, listeners, when you come in, synthetically get long the underlying using options, or get short the underlying using options, to take the alternate offsetting leg in the underlying. So if you do in this case, you're doing the bullish combo, selling the put, buying the call, you'd sell the underlying and do all that together as a package, or vice versa. Not a thing you see going up in huge size much anymore out here. I mean, it used to be a bigger thing when there were a lot more reasons to do it, and cost of carry and things were much bigger issues in the space than they are today. But interesting stuff nonetheless. Let's look back here before we get the Rocklobster's thoughts on this, and he'll take umbrage on me slamming his definition of combo, I'm sure. But let's look back at the year that's been out here in everyone's favorite, LQD. This thing hasn't really had a huge range. Maybe another reason why our friend here is happy to be legging into some size, high delta type positions out here, because you got the underlying leg. Sometimes if you miss that, it could end up wearing a little bit on the prints here. But this thing dipping as low as about 115 and change back in March, and getting as high as about 124 back in, about a year ago, actually, about late August. So not a huge range, about an 8-handle range, which is kind of, if you're going to be slinging a lot of these types of trades, Mr. Rocklobster, perhaps kind of what you want. I'm trying to think, when's the last time you and I really sat down and broke down potentially a large conversion reversal like this? It's been a while.
It has been a while. And, you know, in the old days, there were combos. Hey, I got a combo. That's what and it's not, you know, like you go to the Wiener Circle for a combo. Okay, this is an option combo. However, I was just doing some quick arithmetic on it. I am seeing if you just go with the put prices are around 120.60, stock going up 120.79, so that's 19 cents. So that's a 19-cent debit for the trade, and they're projecting a 32-cent dividend. I have to work out what the cost is, but it's only September 1st, so it's less than a month. So somebody would be paying the divvy through this. They're saying 32 cents maybe. I'm not quite sure if somebody is just, you know, looking at this wrong or not. I don't really know. I'm trying to, the only other thing I can think of, because it's a deeper put, normally, you know, when you're a floor trader and you're like, okay, well, I want deep puts in stock so I can go whack the stock out when you couldn't hit downticks in the old days. You would want stock to sell, and you would whack it out, and then you'd have this big short delta position when you felt like getting aggressive. That's why you would pick something like the 135, because it was very far out of the money. And it's not something that they're going to worry about being assigned. So, that's right, because the call's traded a nickel. So that would add another nickel credit to the trade. So it doesn't look from the pricing that it's trading around the 32-cent dividend price. I have to do the arithmetic again. So it's kind of an odd one. It's almost like somebody wants it to control a block of stock. In this case, they put up around 2 million shares, it looks like, all told, very close to that when I was looking at time and sales. So, again, I got to match the block with the time and sales and get the exact price. But it does look like it's going up. I mean, is there a dime of carry to September 1 for a month?
That seemed a little aggressive to me when I was looking at it initially earlier today.
Seemed a lot, doesn't it?
That's a lot of juice in this relatively low rate 1 month environment. But I hadn't had a chance to dig into all the fundamentals. I thought maybe there was some extra divvy or something lurking. There is a regular dividend to this name.
There's 32 cents in September 1st, but still even if they're trading this thing, I got to do the arithmetic one more time, but somebody looks like they're losing a dime at least. That's 20,000 dimes is $200,000. That's a lot.
Yeah, we're probably confusing the hell out of everybody right now. People usually put these things up, listeners, for a variety of reasons. Usually somehow to game that carry, or like Mr. Rocklap just said, put on a relatively low cost, get some exposure to the underlying, or take it off, depending. You're kind of just swapping synthetic positions for real and vice versa. And hopefully you do that as some sort of advantageous carry to you, or in this case, maybe sometimes you can use it to capture a dividend too. But doesn't seem like in many ways you look at it. The underlying math works out doing about 2 million shares, but how you're looking at it from the dividend perspective, it didn't really seem to make a lot of sense. Interesting one, though. I like to highlight. That's what we like to do here. I like to highlight the weird ones. Speaking of weird, Mr. Rocklap, when you go on your globe-trotting adventures the few times a year when you leave Maine and you come to Chicago pretty much, I'm guessing you probably stay in a fancy place, a high-end place called Extended Stay America. Am I correct?
I think that's what Sebastian shells out for me when I come to Chicago, Extended Stay America.
No expense spared for the Rock Lobster when he leaves the family compound in Maine and comes to Chicago. He gets the Extended Stay America out by the airport. And someone was loving that name today, not just the Rock Lobster. Extended Stay America, ticker symbol, of course, STAY, S-T-A-Y, closing today, $19.76, up about a little over 2% today. It's not a bad day out there. And this is a name that doesn't do really any paper at all, 300 contracts and change. Today doing nearly 16,000. And pretty much more call love, call palooza, call it what you will out here and stay. Of that nearly 16,000, 15,236 coming on the SEP 20s. Big chunks, including one mega block of about 14,000. Total of over 14,000 at the time. Total on the end of the day, 15,000 and change. One large block of nearly 8,000, so nearly half of that, about 78.88, going up for the interesting price of 0.58. Not 0.58, 0.508. nice splits going up on that. A lot of these prints, the rest of the day kind of went up in smaller sequence. We've seen a lot more of that these days. Big print followed by a lot more smaller chunks, still decent size, 300, 500, 600, that sort of thing, but kind of going up scattershot throughout the day. A lot of these went up out of sequence, too, which always makes it fun to analyze it. So they're printing well above the offer, sometimes below the bid, which is always fun. But in general, it was pretty much the same trade, broken up throughout the day, more and more, piling in. Just got to get them some of these SEP 20s, doing it for size. Like we said, total 15,000. Open interest, only 15 contracts, so clearly opening out here. And this was the print du jour. Like I said, this is a very sleepy name, pun intended. But today activity was, shall we say, a wee bit out of ordinary, a little bit aggressive, shall we say. This name that had earnings, not that long ago, about a week ago. And they were looking, not even a week ago, and they were looking pretty good off earnings. They're kind of pretty much about where they were. So maybe not earth-shattering, not too terrible either. So this is not a big earnings play. Instead, it looks like it's someone looking like it is on the surface, gobbling up this bad boy to the tune of nearly 15,000 contracts. And this is a name that traded as low back in October of last year, around 13 and change, and is kind of flirting with recent highs. He got up a little bit briefly, ever so briefly, over 20 last week, right around earnings time. That was kind of about it. So it's been about pretty much a 13.5 to 20 range for this stock. But someone here, Mr. Rock Lobster, saying, you know what? Even looking at the stock, there wasn't a lot of big print of underlying today, so it wasn't like someone was doing these, it was even shy of the ADV today, so these weren't done tied or anything like that. So yeah, it just looks like it is, as it appears to be on the surface. Someone who really likes the 20 handle in stay, and they're putting some size money where their mouth is. This is an interesting one, Mr. Rock Lobster, to do this. It's a sleepy name, like we mentioned. You're going to be wearing this position if it goes against you, because there's no way to get out of this. You're trading with yourself. And this is the thing that's already at the top of its range. What make you of this trade, sir?
Is this one of those ones where we're going to be laughing at ourselves? The fact that, oh, wow, these guys are never going to make any money, and they're going to make about $5 million on these options when they're worth about $7 a piece when it gets bought out. Is that what
I hope so, because that looks good for the show.
In huge on these. And it's not even an unrealistic vol. It's not an unrealistic number, but it looks like somebody put the buyout on this strike. newsletter type trade or something like that. But, definitely paying up through the offer, drove the volatility pretty high. And I mean, more of these calls traded today than the entire open interest in every series. So that is, anybody that's selling them, all I can say is the SEP 20 buy right looks pretty good right now and stay.
Yeah, I was going to say
without any earnings.
That's going to be pretty juicy.
Earnings just came out. I mean, it could be, one of those asset plays or something in play, but at this point, I would just do the buy right. Go for it that way.
You don't want to be the 15,501st call piling in on the strike. But coming in the other way, how many times have we said this on this show? These guys create these distortions. Take advantage of the distortions. If you were thinking about stay anyway, you want to make a nice little kind of create your own divvy and get it for a little bit extra juice than you normally would. Maybe now's the time out there and stay.
You could sell a SEP 20 put for $1.
There you go. That's not bad juice.
It's not terrible.
If you're buying these levels in the stock, if you're buying these levels in the stock, that's not terrible at all. Tell us what you think, listeners. Speaking of that, it's Monday. It's time for you guys to do exactly that. It's time for us to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, this is the mail block, of course, the portion of the show where you guys take the reins. Before we get to that really quick, Mr. Rock Lobster, I see you've been cranking away. This LQD is kind of fascinating you as it is me. You got some more updated numbers on this for us?
Yes, if the divvy's correct, because it projected divvy, somebody's losing 27 cents from the way it was priced, it appears, because I was looking at option combination 1435, which should be 120.65, option combination with stock trading 120.70. That's only a nickel over. So, there's a 32-cent dividend. So unless there's going to be a massive cost of carry shift or something goofy, I don't know. Somebody just gave away a whole lot of money. It's kind of unless my arithmetic is totally wrong and my head is addled, but I don't think so.
You have been known to be addled. Usually when we're talking verticals in like SPY and SPX, that's what seems to addle you the most. You can usually handle a little conversion reversal, though. That one usually doesn't throw you for too much of a loop. But you're right. That's another one of the reasons why we wanted to highlight this one. The math just did not seem to work, which is always fascinating and perhaps a sign of some other agenda at play out there. We shall investigate. Put this one on the to be watched column as well. Let us know your thoughts as we move on. You guys have no end to your thoughts and questions and comments on all things Tesla. Let's get to just a few of you ones, just a few of you out here who've been piling in. Like I said, we've been talking about those puts for a while. A lot of you still waking up to that fact. Like Michael Smith here, Mr. Tanny9 says, this is an obscene amount of unopened interest for that far out of the money talking about those puts. Yes, you're right. They are. Welcome to about 2 months ago when we first discovered that. Bart S also wants to know, hey, are those puts being bought or sold? Well, the lion's share are being bought. There has been a little bit of closing recently, but negligible, a couple hundred contracts here or there. The lion's share coming in, you see it. We tell you, a couple hundred a day, sometimes a little more, sometimes a little less. Just piling into that strike ad nauseum. It's added many, many thousands. We tweeted out the graph last show. Many thousands have been added since we first started watching this. So someone's got an axe to grind there, or a lot of people have very little axes to grind there. Either way, it's the position of choice. Gary Pastor also writing in about that collar we talked about the strangle. The 254.70 strangle. He calls it a collar. Very interesting collar, which I will watch until expiration. It's really a strangle, Gary. But either way, 254.70 expiring in March. You have thoughts on that? 250, a little bit more reasonable of a put strike than 50. I forgot the exact price that strangle went up for, but you can do the math in Tesla. Both of those wings are not exactly cheap. So adding two of them together, going to be costly. So this guy needs some rocking and rolling in Tesla for this bad boy to pay off. Speaking of paying off, let's pay off some of our polls from last week. We asked you, big news last week was SIBO partnering with those Winklevoss twins over there to launch cash-settled Bitcoin futures. So we asked you guys, what do you guys think of this? Are you guys excited? You've been hitting us up for months now about Bitcoin. What do you think about this? An actual product you can trade. We asked you guys, are you excited? So you can't wait? You're not interested? you're somewhat curious, or you're out there waiting for Ethereum or in search your cryptocurrency of choice. 41% saying you're somewhat curious. So you want to probably trade it, but you're going to wait till it lists and get more information on the underlying. I'm with you on that. I can understand that. 34% though, a little more than a third, just super excited, say they can't wait. So about three quarters of you out there, between the two of you between the two of them, are mildly to very interested in this. So interesting. Only 17% not interested, 8% waiting for Ethereum out there. Let's see. Oh yeah, and people want to know about our thoughts on this too, like upward momentum. He wants to know, is this a good thing? Talking about the options exchange is weighing in on this, launching these. I've weighed in on this a bunch. Not this specific question, but themes similar to this on other shows. So I'll let you guys have at it for a second. Mr. Uncle Mike, we'll start with you. You've been resting long enough. Are you excited at all about this notion of finally having a listed Bitcoin product we can trade on an exchange that people have actually heard of with actual market makers? Or are you kind of not interested in the whole crypto thing?
I'm intrigued, to say the least. I think that this is something that I'll definitely be watching it, and they might not. It might not really do much the first time around. I remember when weekly options first came out, I believe it was in either 06 or 07, I believe it was. It really wasn't that big of a deal. It was kind of a hassle, quite honestly, being in the brokerage world at that time. But as they evolved and as they kind of saw more of what the people wanted, I mean, they're huge right now. They've pretty much put Expiration Friday out of business because every day's Expiration Friday. Sometimes exchanges really get it right with things. Sometimes it becomes a bomb. Some of the bombs, of course, have been the 10 share options, to where the brokers didn't want to lower their commissions for it, and the market makers didn't want to decrease their spreads, and it kind of just never worked, and that never got off the ground. But that one might come back at some point. Some of the indices that they've come out with through the years have been really good. Of course, the VIX and the SPX are very good, are very popular. And of course, some of the ones that didn't do so well, I don't know if you remember the Syndex from the ISE. I thought that one was a lot of fun, and that you had all the companies that did the quote unquote morally hazardous things, to where you could always tell people, well, if you don't like that, then buy puts on it. So I'm intrigued by it, and I think this is one that it has a chance to get some legs. How it actually works and what the best way of doing it and the best way of trading it, time will tell with that, and the market will dictate that as well. But I am definitely intrigued, and I will be watching it. And I'm not even much of a Bitcoin kind of person. I'm just a fan of options.
There you go, fan of options. In this case, cash settled futures, but I got to imagine options are coming right down the pike after it. Mr. Rock Lobster, you got the hardcores. Anybody hitting you up on open mic in between the combo risk reversal jokes with interest in this stuff?
We had a really good presentation on it when we were at our Pro Summit, which you missed because you were on another vacation, or you're on assignment for the Option Insider Radio.
My annual once-a-year assignment that I do. Oh, crazy me.
Yes. I saw, oh my gosh, I don't have the guy's card. He did a really good job on it. Dang, poop. But he did give us a great, I've got his slide deck and stuff, but a great presentation on it, and, the future of it, and kind of like sort of, where can it be and what can it do, and the things that have made it move in the past and the things that are possible to make it move. So very interesting. It's like almost anything else. Is it worth it to own a little bit? Yeah, maybe. Pretty volatile, probably. I think a future product is simple enough where people are like, I just want to buy Bitcoin. Screw it. It's cash settled. It's simple. There's no, you have no settlement risk. It's just, I'm going to be long it, I'm going to be shorted, and you ride the wave. Generally, the simpler products are more popular, and the SIBOs learned a lot, knowing that having the future is key. You need an underlying to price the options, and that is, for the, no pun intended, for the future of the product is the way to start, I think. So they know how to launch products like this, and we'll see it happen. I think it will trade, and you will see some enormous moves. I'm wondering if they put a circuit breaker on it or not. That would be the other thing, just to kind of keep people, or how they margin it. I don't think it's going to be a 10% margin product to short it. You know? That can get a little dicey.
I think implicit in listing this thing is going to tamp down on some of the madness. You know, you're not going to see these 70% sell-offs in a week or two kind of thing like you're seeing out there now when it's kind of just in the Wild West. So, yeah, I think the margining, obviously, there's a lot of devil in the details, which is why I'm with the people who, almost half of you said you're interested but you want to wait because a lot of that has to be worked out. But I think we can expect, hopefully, that'd be a good outcome, I think, as opposed to this kind of Wild West thing it is now is probably not good for anybody unless the super crazy bulls who've been sticking it out for all this time. We also asked you guys last week, which exchange group do you feel has carved out the largest piece of the options market so far this year? We looked at the data courtesy of our friends over there at OCC. So we gave you 4 choices. We said Cboe Bats, NASDAQ, and remember, NASDAQ's a whole exchange family, so you got Philly and everything else in there. NYSE, also an exchange family. You got Amex, you got ARCA. And then for fun, we threw in IBoxx and IBoxx. They're not affiliated, but we added them together anyway. You only get 4 choices. Mr. Uncle Mike, which one do you think is winning? Actually, I'll give you what our audience said first because this poll is done. 72% saying Cboe Bats, 17% saying NASDAQ, 3% saying NYSE, 8% coming in from IBoxx and IBoxx. Getting a little love for those two over there. Do you agree or disagree, Mr. Uncle Mike?
As much as I'd like to go with the box, no. Got to go with the locals. Cboe all the way, baby.
Mr. Rock Lobster, do you concur with our audience as well, or are they mad folks?
They're not mad folks. I think the Cboe's winning, but they put up an awful lot of crosses on the Philly. But that would be NASDAQ, I think.
All that div paper, all that divvy paper going up over there on Philly. Yeah, it's a close fight, but Cboe Bats taking it. Of course, Cboe and Bats joined together now. That kind of put them over the top. But according to our friends at OCC, a little over 41%, 41.7% for the Cboe, 36.5% for NASDAQ, 13.5% for NYSE, all those guys added together. And our friends IBoxx and IBoxx bringing up the rear, 7.12%. Getting a lot of votes, though, so getting a little bit of love. We got a question about IBoxx later. We'll get to that in a little bit. Maybe if we have time. Some of the other guys firing in really quick. I love this one from F Contango Trader. In fact, we retweeted it, so hopefully our Mr. Scaramucci follows us, so he should probably see it, which would be funny. But he suggests he tweeted a link from the Urban Dictionary to Scaramucci and the definition of that. And he says he thinks maybe 2-week options should be called Scaramucci's. So there you go. I like this one, Mr. Rock Lobster. You on board? I think we should tell our friends over at OCC they should be looking into this.
Well, as I recall, wasn't the guys that founded Toss, they wanted to change the name for weeklies to quickies, which I thought was pretty good marketing. Yes. So now you think the Cboe could put the Scaramucci in for the 2-week options?
I think it'd be cool. It's also one of those references that would be dated in about 6 months. Everyone's like, what the heck are you talking about? So maybe it's better now than later, but it would be fun. I'm with it. I'm on board with it. Let's see. Let's do some quick ones here. This one's a fun one. Comes from Tim. This is kind of analogous to what we were talking about before, the conversion reversal and cost to carry. Tim writing in, this is in response. He says, in response to the guy who asked about cheap trades. I think that's the person who wrote in, Richard, I think his name was, or maybe Robert. Right here, Richard, I see it. Richard D. He asked, I pay no fees in my account now. What should I trade? And we kind of pontificated about that a little bit. This guy suggests, what about a box? I just thought this was hilarious. I wanted to put it up there. I'm trying to think of when the last time or even how viable it is for a retail guy, even sans fees, to put up a box. I mean, box listeners, of course, 4 legs of a spread. You're pretty much trading all cost to carry. It comes down to your cost to carry, your margin set up even more than your commissions. Commissions are a part of it, obviously. But I'm trying to think, what's an environment, Mr. Rock Lobster, where you would even recommend that a retail guy would even trade a box? That's a funny suggestion. It gets points for creativity.
They could try to trade a box in a hard to borrow stock, but then if they were assigned the short call, they'd have to cover it and they'd be grumpy and sad. So, I mean, that's really the only chance a retail trader would have, or trying to game a divvy. That's a possibility. Those are the 2 cost to carry trades that are possible. But just tell all retail people out there, you could be assigned on your short option and you're going to have to carry the stock, although the risk is the same. Trust me, the risk is the same. You're still going to be grumpy because you're going to have to go close the one leg, the stock leg, if you don't have the margin. And then you have 3 sides of the box left, which are open, and you've got to close those because then you have a synthetic option. So I know that might be complicated, but Just don't trade any boxes.
Yes, that's what I was hoping you were going to get to. It was a long way around to getting to that, but you finally got there. Well done, sir.
I can always, we teach people about that stuff,
don't
but
trade boxes.
Ultimately don't do it.
Do not do it. There's zero reason. Uncle Mikey, you ever slung a box in your days, sir?
I have, and the only time that I'll do a box is if I'll put on, let's say, a vertical call spread, and because of the fact that I trade a lot of different account sizes, some of them are 5,000, some of them are several million, and so because of that, I don't want someone with like a $5,000 account to be victim to a day trading rule. So let's say I put on a vertical spread and the market moves a lot for me or against me by day's end, and I don't want to take on that risk overnight, then I would do the corresponding opposite trade to take the risk off and create a box spread that way. And so that way I wouldn't get dinged for day trading. But that is the only time that I could see myself ever doing a box on purpose.
Interesting. A more regulatory themed box than any sort of cost of carry play or anything like that. I like that. It is funny, the unintended consequences of the way we set up these systems these days, and forcing Uncle Mike into boxes is one of the unintended consequences. Yeah, but outside of that rare scenario, there's not a lot of reason. It's just not favorable for retail to be slinging boxes. We're knee deep in the synthetics today, Mr. Rock Lobster. We're going to be terrifying people, I think, out there in the audience. Either way, let's keep on rolling. Great questions. Let's head into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. That is the portion of the show, of course, where we look ahead. Lots of stuff popping off this week. Got some big names still popping up, including Disney popping off after the bell tomorrow. They're pricing in about $3.60. So we're at about 3.3% out there. We'll see if they can deliver. There's been a lot of debate about Disney. Are they overvalued? Are they going to be knocking out of the park with all this stuff they got going on in the parks, literally, and in the movie theaters and everything else? So they got a lot of good brands under that stable, or will ESPN continue to weigh them down like an anchor? We shall see a lot of other names popping off this week. What are you watching the rest of this week? Let's start with Uncle Mike, sir.
I'm watching numbers and I'm watching the macros. I think that at some point there's going to be some news that does something to this market, and I can't say when, because if it hasn't happened yet, one would say, well, if the news that we've had, if it doesn't move this market, it's not going to move the market. That's a very valid point, but I think at some point it will, whether it's North Korea, whether it's Russia, whether it's healthcare, tax reform, whatever it may be. I think something could move the market, and that's what I'm watching.
There you go, Uncle Mike watching something. We'll keep an eye on that with him as well. Mr. Rock Lobster, are you watching something else aside from the same something that Uncle Mike is watching?
Well, we do watch the stock market, so I guess we do watch the same kind of stuff. It seems like interest rates all of a sudden look like they're ticking up a little bit. So, the banks are rallying again. So we'll see where that goes. That could be maybe the mystery behind the LQD trade, with interest rates kind of flying around, or the banks flying around right now. It looks like they just fly around when they think rates are going up. So I will continue to watch that. Volatility is cheap in XLF for that score. And NVIDIA, again, the big earnings. Can they just blow the doors off of earnings and freak people out and the stock go to 200, which I just assume it's going to do if the earnings are even halfway decent. So very, very exciting. It's kind of like in the 90s, stocks rallied because everybody thought they could make money. And now, corporate earnings, all-time high, NVIDIA, all-time high profits. Now, all of a sudden, companies are making a lot of money and the stocks are higher. So, it's at least there's a little bit more of a reason for the low vol insanity that we're seeing, because companies are making money. That's what it is.
Even the diehard fundamentalist liking what he's seeing out there in the options price, or not options prices, stock prices, maybe option prices too, but mostly stock valuation. That should maybe tell you something. If he's liking it, maybe it's contrarian. But yeah, big names popping off on Thursday after the bell, so make sure to join us. Then we got Snap, the much maligned Snap. We're just talking about NVIDIA. They're popping off after the bell on Thursday too, so we'll get to talk about it live on the show. That should be fun. We got Blue Apron before the open. We can slam them together. I'm sure the market will. We'll see. I hear they even delivered to Maine now, which is crazy. That's got to be the selling point for that stock at that point. But that said, let's go around the horn one last time. Uncle Mike, we'll start with you. What is cooking in the land of all things RCM?
Hey, at RCM, we are excited. We have fall coming up right now. Kids are going back to school. Now you actually have some time to discuss your finances. If you're looking for a financial advisor who is not afraid of the word row, feel free to give me a call, and I'd be happy to work with you in any way with which we can. Whether you have several $1 million or just a couple $100, give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. Also, buy my book on Amazon. Go long, New Option Strategies for Buy and Hold Investors. And also, if you do end up doing business with me, I will pay $100 to Andrew and the Greasy Meatball for any product with which they sell. You have a $100 gift card coming directly from me to the Option Pit.
Does that include their infamous How to Trade Boxes webinar? I want to check that one out.
Oh, heck, no, it doesn't, because I'd pay for that one.
That's their best seller, Mr. Rock Lobster, in addition to How to Trade Boxes, which we all know everyone's already coming to you guys to get. I hear you guys got some big event coming up soon. What's going on there?
Yes, Pro Trader Summit, Mark is hosting in middle of September. Go to our event page. Great stuff. So go check it out. What is it? The 27th through the 29th. Mark's hosting a good event. All of it, you learn tons of stuff. All of our clients love them. So we line up people where you actually learn stuff. I know, it's crazy.
Crazy cakes. You're not coming in for this one?
I am not. The weather's still too good in Maine.
You don't have enough Extended Stay America points yet. That's what it is. That's why you're buying all those calls today. You want to jack up your points a little bit out there. I understand. I see what's going on.
Exactly.
Oh, I'll be there in some capacity. So if you want to check that out, optionpit.com. I still don't know what I'm going to be doing there. We'll see. Maybe we'll do a few fun shows or fun things like that. Check it out over there on the events page of optionpit.com to learn more. No Rock Lobster. Maybe that's a plus. We'll let you decide as we wrap up this episode. On behalf of the Rock Lobster, I'm sure is taking umbrage right now, and Uncle Mike, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing, hitting us up with such great questions. Keep them coming. We'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.